Good morning, everybody, and thank you for joining us for today's webinar with the Chairman and the CEO of BluGlass. My name is Ron Betchler. I'll be hosting today. As with prior webinars, if you have a question that you'd like covered off after a short presentation from both Jims, then can you please put it in the Q&A and please identify yourself. I won't be asking anonymous questions. Obviously, because we don't know who it will be from, but we'll try and cover as much as we can. We have until about 5 to 11, so we've got about 45 minutes or so for this session today. So you will have seen that the company lodged its quarterly update recently. There's a lot been going on, a lot of developments and progress in the growth strategy. I don't want to steal the thunder from James and Jim, so I'll hand over now to James Walker, who's the chair of BluGlass, to give us a few key highlights coming out of the last quarter. Jim will cover off some operational highlights, and then we'll head into the Q&A. Thanks, James.
Great, thanks, Ron, and thanks for so many shareholders logging in today. Great to see the support once again, so thanks, everyone. So as Ron said, I mean, we've had a very eventful start to 2023. We're starting to commercialise on what we've been telling most of you shareholders about for a long time, that we are going to start commercialising our technology, and I'm very happy to say that we're now executing on that strategy. So we've launched products in market, we've got customers buying our products. We are now really executing on what our plans have been and what we've been communicating to the market for a long time. So with that's process starting. As you would all know, we completed a very successful capital raise with Bell Potter in March and April this year, where we raised $10.2 million. So, you know, the company is now in a good position and well funded to start executing on those plans. So feeling quite good about where we are. What I will raise right up front is, you know, the last 4C that we lodged. So the last 4C that we lodged, you know, one of the quirks of the 4C is the formula at the back there to when you have to work out how many quarters of cash that you have. The quirk of the March quarter, you know, the formula showed that we had less than 2 quarters. I want to assure everybody here today that's not the case. The capital raise we completed means we're well funded. And in addition to that, we all know in September or October, the company receives a very significant R&D grant. And last year, that was $4 million. I think, as most of you know, we've had our US R&D expenditure approved by Oz Industry this year because the skills just aren't here in Australia. So our R&D refund for this year, which we'll receive in either late September or early October, will be well in excess of the $4 million that we received last year. So, you know, our quarterly cash flow will have, you know, some big swings in it, as what you've seen. So to give you an example of the quirk of that formula, the October, November, December cash flow that we lodged last year, the formula showed that we had 282 quarters worth of cash at that point, because that was the quarter we received the R&D grant in, and clearly that was not the case either. So I want people to be assured that through the Bell Potter raise that we did a couple of months ago, we're now well funded, and this should give Jim the runway to execute on the plans that he's going to talk about today. So once again, thanks for the support, and I'll hand over to Jim on how we've been performing.
Hello, everyone. When we last spoke, we talked at the AGM about our plan moving forward, and there are 3 key elements to that. 1, we would launch our Silicon Valley fab in Fremont. 2, we would begin to consolidate from the CMs into that fab, and we would use those 1 and 2 to launch products. Since that time, we have made progress on all 3 fronts. Our fab came online very quickly, and we were able to then consolidate 2 of the fabs, CMs into our fab, and we're continuing that. But the culmination of that, the most exciting part, is we were able to launch our first product suite at Photonics West in San Francisco, and that generated considerable interest in the marketplace, and that has been very excited. So basically, in summary, we have delivered on all 3 of those fronts that we said. Our fab is producing those products that we showed at Photonics West. Our customers are excited about those products, and we are continuing to consolidate.
Thanks, James, and thanks, Jim. So we'll throw into Q&A now, but just to remind people, if you would like to have a question covered in this session, please type it into the Q&A box and identify yourself. We're not opening lines, and so if you raise your hand, I won't be able to cover what you'd like to discuss, but please type it in the Q&A box and we'll cover it. We've got a few questions that have come in beforehand, and a couple of questions I'd love to ask too. So maybe we'll start on that as people type in their questions. Firstly, and maybe to you, Jim, your first gallium nitride lasers are now in the market, and the company secured initial customer orders. What sectors or applications are you seeing the strongest demand for these products? And how have customers and potential customers reacted to the BluGlass product?
Well, the first products suite that we launched were 3 single mode products and 3 multi-mode products spanning wavelengths from 405, 420 to 450. We generated interest in those the markets that we've discussed in the past, which basically we talked about the industrial and the scientific, biotech, display, and defense. Where we're seeing the most traction and the most excitement are in scientific and biotech markets, but we also have seen some in the industrial mapping and machine vision. So those 3 areas have been quite exciting for us, and we have not only seen interest in our release products, but also in our product roadmap moving forward.
Thanks, and maybe we'll stay just at a high level for the moment. There's a bunch of questions flowing in, but we don't tend to think of lasers as something that we have exposure to in everyday life, but laser technology is used in the manufacture and proper operation of almost all leading edge technologies and industries today. We think about the semiconductor industry, for example, needs lasers. Can you, with BluGlass focused on some specific markets, as you've just mentioned, Jim, can you kind of give us a sense of what the total addressable market for BluGlass's first laser products is?
Well, we have in the visible market, as you said, lasers are ubiquitous. They're everywhere, from in the grocery market checkout stands to in your cars and in your basically the way that we are communicating right now is because there's lasers and fiber optics, so they're everywhere. The visible lasers are taking two avenues. They're getting a approach to consume some of the existing markets, and they're enabling new markets. What we see is about a $2.5 billion market in the year 2025 for the visible laser market. And our addressable part of that with our roadmap is about $735 million in that time frame. So the opportunities are broad, and basically what we see as we develop this roadmap, we are seeing it play out in the orders that I discussed earlier, that they are coming in those key markets. And 3 of those key markets are right now where we're getting the most, but we're getting the most traction, but we are having conversations also in the defense markets and R&D markets as well.
Maybe a question for James. And it might not be a question you can easily answer or can answer, but if you look at 3 to 5 years, what market share targets has the board set for the company?
Yeah, so that's a typical one, right? So we're starting off from a base of 0, but what is in our advantage is that there are only 2 other suppliers in this space, Osram and Nuccia, the two large suppliers. And what the customers are telling us that they're looking for a 3rd supplier, desperate for a 3rd supplier, not just in the wavelengths, where we will be far more nimble and flexible on the wavelengths that we offer, but also the form factor, so the packaging that our customers need to actually use the lasers in their applications. So we're quite excited by the size of the market. We're excited that customers are looking for a 3rd supplier. And on that basis, we're quietly confident that we should be able to grab a significant market share of the 735 that Jim talked about earlier. What I will say is it's not just a dream that we should capture a good market share. We have the manufacturing capability now with our facility in Fremont. And as those facilities come in-house, as Jim will talk about and has talked about already, we actually have a significant manufacturing capability to actually meet that market share. So pretty excited about what we could capture in the future as the more and more products get launched.
Maybe just to keep on the topic of the fab, this is one of the company shareholders put this question in. Can you give investors an idea of the capacity of the fab with the current equipment and what you're expecting from the chip funds in the US to update that equipment?
If we look at the fab and the equipment that we have here, there's two types of equipment in general. There's the facilities equipment, and there's specific process equipment. And so those capacities are different, and each piece of equipment has a different capacity. But in general, we've looked at the fab and we've compared it to the epi capacity that we have in Silverwater. And we believe that with this fab, we can grow in the facilities by adding some key equipment. Some areas we may not have to add as much as others, but by adding some key equipment through the years, we believe that we can achieve about $170 million that balances very well with the Silverwater capacity.
How are you progressing with the vertical integration of the Silicon Valley facility?
We're, as I said, we've got this fab that we are producing in the middle of the epi, and then we have the packaging. So the fab does everything in between. And if you're familiar with the process, basically there's a P-side process and an N-side process, a front and a back. And then we have to break it up into the laser components itself. And there's a process where you have to put mirrors on it. So we've talked about those key areas that we have to do development. We've done the metallizations for both the top and the bottom. We've got the top side process completely in-house now. And we're working closely with the backside vendor. Part of the process they do in their building and partly is done here now. And for the facet passivation and mirror coaters, we do those in-house, and in parallel, we're still doing them at the CM. But we're doing the full process in-house already. And we're going to run in parallel for a while. That's a very key area that we want to make sure that we have it just right. So basically, there's a top, the bottom, and the front and the back. We've got top completely done, bottom partially done, front and back. We've done it all. We're just figuring out how to then transition all of it to us.
Maybe just staying on the fab, and there's a lot of questions that come in about customers and qualification and so on. And I'll touch on that, come on to that next, because obviously with the company now commercializing, it's a key area for the go forward. But just on the integration of the fab, and there's a question from one of the shareholders, as you become fully integrated regarding the fab by 30 June, if we look at costs for the September quarter and following that, should we expect a material fall in costs or cash burn?
Yeah, so well, I guess, Jim, you want to talk about the operations and what the resources change, and then I can talk about what the cash burn looks like going forward after that.
So the right now we're running in parallel. So we are operating in our fab and at the CMs at the same time. So our run rate's a little higher than we expect it to be for the same level of activity. So once we complete the transition in-house, we do expect to see some month-to-month cost improvement. I'll let James go into that. But then once we're focused in-house, even now, the advantages to us of having it in-house is that we are controlling our operations. We are able to get faster turns than we saw before. And when we talk about being flexible, we're able to put products in the line more quickly and get those through the line. So it helps not only our NPI, but as we do get these customer orders, it helps us to address the orders that we receive.
Yeah, and just following that through on the burn side, we bought that facility in May last year, so a year ago, started coming online fairly quickly after that. So we've been running a parallel stream now for nearly a year. So there's no doubt our burn that you see in our 4C is higher than it will be going forward. We expect that to drop off. Most of those processes, that will be done by June. So you don't expect a lot in the June quarter, but going forward after that, you will see a change in the expense profile. Now, some of those expenses may change actually while we're ramping up production and selling more product, but the actual cost per unit will be significantly lower than it is at the moment when we're running two streams in parallel.
Just a quick point of clarification someone's asked. When we talk about numbers, like we talked about the TAM at the start of this conversation, are we quoting US dollars or A dollars?
US dollars. Thank
you. Let's turn to it's really exciting sort of area, which is on the customer and commercialization phase. Question from one of our investors: after Photonics West, you spoke of a large number of leads. You've clearly landed a few, which is great. In the short term, can we expect more customers to come on board, or is the focus to concentrate on those that you're currently working with?
I like the answer of both. So we have some customers that have placed orders with us, and some that showed interest, short-term interest, and then others that were longer-term interest. And so there's a few levels of engagement. Some move very quickly, and we've already started supplying to those. And those were in both the release products and also interest in our prototype products. So we've got traction in both of those areas. And then there's other customers that are having a little bit of more discussions that are still coming to some conclusions, and we will continue to see those orders come in, and we are seeing those still. And then there's a third set that sometimes even some from very top tier, they're talking to us about large programs where those take a lot more discussions. We get into contracts, those types of things, where they may not necessarily want something that we're doing right now, but they want something special. And this was where we come back to both our flexibility that we've discussed, but also our the performance that we've shown has garnered their interest. They see what we're doing, they see the progress, especially over year. One CEO of a very large company looked at me at Photonics West, said, "Man, you said what you're going to do last year. I didn't believe you. And this year you're showing me the data. You did even more than what you said you would do." And so that's very powerful, and it's leading to conversations to continue to grow those relationships. Those will take some time.
When do you expect first customers to complete qualification? And then once they do, can you give us an indication of what you believe repeat order volumes will look like?
The qualification depends. I think I've talked before about sort of a sliding scale. There are some processes that they're short and they don't happen all the time. Something like that would be a blood sensing type of process where you've got a laser that's in a lab that's used periodically to test blood samples when they come in, and the test doesn't taste very long. And then there's applications where they're used 24/7 around the clock in industrial manufacturing plants. Those take a long time. They have to live a long time, and you need large samples to prove that you have the reliability. And you can see that the longer time the laser has to live, the longer it takes to prove that it does that. So those will be longer engagements. And the shorter ones will happen more quickly. And so it could happen in, some of the shorter times, 2 to 3 months, could be 6 months or more for some of the longer applications.
And then with each new customer, do they need to qualify BluGlass lasers in their products? So do you have to keep doing qualification processes?
There are 2 levels to that. Yes, there's a qualifying of a company, and then there's a qualifying of the laser. So that we're in the first stage for everybody, right? Because they want to say who's BluGlass, and then there will be a product qualification that goes into each product they design. And so even if we're designed in their first product, our goal is to get designed in their next one as well. And just as we will have a qualification for each product that we do, our customers will as well.
Can you shed some light on how BluGlass's products compare against the competitors, And how confident are you for getting large orders from the customers who've placed initial orders for testing?
Yeah, so we have, there's a handful of players in the visible and UV areas. What we are seeing is our single mode products that are coming out with are quickly reaching an on par level with the big guys. And so that's very exciting for us. And we're getting a lot of interest in that because we moved along very quickly to achieve that. Our multi-mode products, we're starting at a lower power. We will move to higher power. As I said earlier, our higher power prototypes are already gaining interest, and we've got a good size order for those prototypes. Those are further away from what we call state of the art, but we are moving quickly to narrow those gaps. So in the short of things, we are seeing in the 405, 420, definitely seeing traction with our single modes that are on par with our best players. And as I said earlier, our multi-mode products are generating interest. They're not quite near where our competitors are yet.
Thank you. Maybe question, we had a couple of questions on this. How is the RP-CVD work progressing, and when do you think you'll have alpha beta products ready for evaluation?
Okay, so many of you are probably intimately familiar with our RP-CVD and understand that our first products are being launched with MOCVD. MOCVD is an industry standard process that's used to grow the lasers. RP-CVD is a technology that BluGlass invented, and we invented it to provide advantages to us and to our customers. Those advantages are several, but key ones are that it allows us to move to longer wavelengths without adding damage to the quantum wells that provide the light output from the lasers. And it also allows us to grow the top side. I talked about the top and the bottom. Well, the top layers of the epi, when you grow those can damage the lower parts where the quantum wells are at. And also with the common MOCVD process, when you grow this, it takes post-processing to get it to be nice, low resistance and so forth. We've developed a process that we call active as grown, and we're showing that works. In fact, at Photonics West, we demonstrated we had a paper that we presented that was on a laser called a DFB laser, and that's a fancy term for distributed feedback laser. But what it does is it takes a large spectrum of light, where maybe there's nanometers of broad spectrum, to a very narrow spectrum of light. And what that does for our customers, it excites them because they're able to then put it into, especially their quantum computing systems, where they want to only excite a certain interaction in the crystal. And so that generated a lot of interest. And when we did that product, we did it as a blue laser. And we did some with only MOCVD, and then we did some where we grew the first part with MOCVD, and we finished up the top layers, very crucial part of the design, with our RP-CVD. And when we did what's called an LIV, light, current, and voltage scan of both of those lasers, we saw better performance on all three of those vectors. Our light output was better, our voltage was lower, and our current basically had the current interaction with both the light and the IV was better. So.
The last release that the company put out mentioned advanced discussions with multiple potential customers, and you kind of touched on it a little bit earlier, Jim. We've got a shareholder asking if you can expand any further on what's happening in terms of the discussions with the potential customers.
Can you restate that, please, Ron?
So the last press release that BluGlass put out mentioned that the company is in advanced discussions with multiple potential customers. You touched on this a bit earlier, but can you expand any further on this?
Yes, we have several customers that we're still engaged in different levels of applications and different markets. Some of the same markets that we're in that we've already mentioned, quantum. We really recently talked about a company that's doing surgical equipment. We have ongoing discussions with those, and additionally, we're finding that there are other customers coming in. And I did mention that we are in discussion with some top tier companies that want us to do some projects and product developments. And we have also announced that we are working with a company called Ganvix. We are able to say that name because we have an agreement with them. Most of our companies we can't say, but they're another startup. They're a very interesting startup because VCSELs, which is a surface emitting laser, is a very exciting addition to our portfolio. So we're working with them in conjunction to demonstrate this VCSEL, and they are also in discussion with 2 large customers. And so they're then coming to us to say, can we go faster? So we are seeing that traction in several areas of our market, several markets and several customers.
Also thinking about future sales, question from a shareholder here, BLG's strategy of executing with some partnerships to scale sales, how is that progressing?
It's progressing well. Several of these orders that we are fulfilling are coming through through those relationships, and that's key to us because it will allow us to have additional volume, and they are at volumes far beyond where our back-end New Hampshire facility is designed to do. But in parallel to that, we are putting product through our New Hampshire fab, and that's where some of our flexibility comes. Some of our shipments are going straight out of New Hampshire to our customers.
We've talked about talks with customers. You've just talked about some partnerships and how that's helping scale sales. Now, in terms of the existing customers who've placed initial orders for testing, we've got a question around how confident you are for getting large orders from them.
That's a good question. Well, so far we're confident because the customers that the big existing customers have huge markets, and they've got proven track records. And so we're confident that their products are going to make traction in the market. And our team here has proven its ability already to develop lasers, get them to this stage. But not only that, it hasn't been all roses and sunshine. We've encountered problems and we fixed them along the way. So if we encounter problems with our customers, we are confident that we will address those as well. Our engagements have been very collaborative. And so we don't have the feeling that anybody is coming into us and saying, look, we're demanding this or demanding that. They're coming in and saying, look, we like what you guys are doing. We want to work with you, and we want this to be a win-win relationship. So that bolsters our confidence. And then there's other companies that are smaller like us. They're also agile and they're hungry, and they don't have market share yet. But that's what we're saying. We have opportunities in existing markets, and we have opportunities for new markets. Some of those companies are going to do awesome, and they're going to grow, and we're going to grow with them. We've got the two-pronged approach.
Question that's just come in, and we'll touch on that, and then just to finalize on the customer side, and then there's a few other questions I'd like to ask before we wrap up. So this is from a shareholder. I'll split it up because there's a couple of questions within the whole question. How can you say, and I don't know if you're willing to because of commercial sensitivities, but the question is, can you say how many purchase orders have been received from customers and how many have been delivered to them and currently being tested?
So you're asking how many purchase orders, how many we've delivered,
and how many are currently being tested?
And how many currently being tested? I should know off the top of my head exactly how many. I'll say we've had a handful of purchase orders, and we have a handful in process. And then we have not quite a whole handful and big projects in discussion. We have delivered some, but not all of those, and we've had some feedback on testing, but not a lot. And I basically what usually the bad news happens first. And so sometimes no news is good news. So if it takes a while for our customers to put them in product and find them failing, that's good news for us. So we have are continuing those discussions, and we expect to get more feedback. But like I said, the shorter term usually is 2 to 3 months for them to get products through their line into their products and do any kind of testing, over a certain period that gives them the confidence they have what they need.
And then next phase of the question, how long before you expect more initial orders, and will you inform the market when you receive them?
By initial, do they mean repeat orders? We're
No.
continuing to talk for
Is it like
initial.
initial orders from new customers?
Yeah, so we are getting initial orders, right, still, and we will announce as we're allowed to. There are some rules on how often and what kind of announcements we can go out to the market with, and we will abide by those.
And then lastly, when you receive an initial order, does the company have any sense of how large the repeat order will be?
We do have projections from our customers, and we have some customers that are asking us to quote up to 1 million or 30 million parts. No, that's not for this year or next year. That's down the road. They have a map and they want to see what it might be. Then we have other customers that are only going to be 100 to 200 parts each year. So we have a wide range. And then as I said, we have some customers that are doing government type of thing where they're going to come in and they're going to want to develop a capability. And those capabilities usually don't come with a volume quote or expectation, but what they do is they want to have it available, and they call it dual use. So our idea is to use those so they're applicable to our commercially released products too, which the government does like, because then they know that we're keeping it tuned up and ready for them when they come in. So there's a wide spectrum, and that's one reason we want to have the flexible, not necessarily just go after all the high volume, low mix stuff, but we want to have a mix of products that addresses several markets.
I know I said we'd move on beyond customers, but we've just had a couple of more customer questions that I think would be useful to cover off from one of our shareholders, and then I will move on to the next topic. How sticky are customers once they decide to go with BluGlass?
Stickiness is, I guess, probably everybody understands that term, but once a customer is ordering your product, how easy is it for them to move to another vendor? If you go back to our discussion a little while ago about the different types of qualification our customers have to go through, they don't necessarily want to spend that money again or take the time to do that. So once we're qualified, it's a pretty good, bet to say, look, they're going to stick with us. I've actually introduced in my past products that were better, lower cost, and lower cost of ownership also. In other words, higher efficiency, where certain customers like Fortune 500 companies would not switch from their current supplier because they really didn't want to lose that relationship, which was for several other products that we were just trying to get in a niche. So we will have a very sticky product. Another element that we have when we're talking about our ability to and our willingness to ship different form factors than what our competitors are willing to do. Those form factors, once they put that in their product, if they can't get that form factor somewhere else, you can imagine that they have to stick with us, right? Some of the products we're going to deliver are in products that are what you might call mutual supply agreement type of things. They're the same form factor. Those probably would be the easier, and that's what we'll have to do to go after markets and consume someone else's market. But then we'd have to go through the qual as well. So basically, some products will be sticky because the customers don't want to go through a qualification. Some will be sticky because they can't get the form factor. We're going to do something that's custom for them. And some is going to be dog eat dog, compete against us.
Just very quickly, in terms of customer payments, are they upfront or on terms?
They're on terms. Yeah, we strive for net 30 or better.
Okay. Maybe I don't know if this is a question you want to ask because it might be commercially sensitive, but a couple of shareholders have asked. So we've got the. Can you provide any details around the Munich Photonics Expo in June, and any proposed releases, product launches coming up?
In June, what we are anticipating is to take a look at the portfolio we've already released and do performance. What I'd say is facelift, because we've continued to make improvements on as we're moving them completely into our fab. And so each time we're doing that, we're seeing some notch up in performance. So we're expecting to see a little better performance on existing products. And we do expect to have some more prototypes. We talked about the higher power prototypes that we didn't put on the market, but we have customers are talking to us about it. We're going to talk about those more at in Munich.
Maybe a question, I don't know if it's for you, Jim or James. On the latest presentation, BluGlass indicated estimated revenue of $4 million US in calendar year 24. Based on the latest developments, do you think it's possible to get a higher income level earlier next year?
So, I mean, so there were some scenarios put out in that presentation talking about where we think and what percentage of the market share we can capture. So we're still confident about the opportunity to capture large market share because of one of the products we've already got in market. But as Jim said, the future enhancements in the power output and as we release more products to market. So I would expect that, you know, you will see a significant ramp up in revenue now, obviously coming off a low base, but we feel that, you know, capturing good revenue share up till 2024 and beyond is definitely achievable. So I would like to think, you know, we're going to be in that ballpark.
I'm conscious of time. We've got a couple more minutes left, and unfortunately, we're not going to be able to answer all questions. But one question that comes up, obviously, the cash burn in the March quarter was around 4 million.
Yep.
Does this burn rate drop significantly when the business exits its contract manufacturers? And given that you've just raised capital, what does the operational runway look like?
Yeah, so I think we touched on that right at the start, but happy to talk about it again. So as we said earlier, we've been running a parallel process with contract manufacturers and scaling up the Fremont facility for nearly a year now. So clearly our burn is much higher than it will be once we move completely into the Fremont facility and we don't have contract manufacturers anymore. But the burn will also reduce significantly because we'll be selling products and selling more products. So the net burn will move quite differently from the quarter that you've just seen. Of course, we have that one-off quarter that I talked about earlier where we have a significant R&D grant coming in. That'll have a big impact on our cash position. So I'm feeling quite comfortable about where we are in our cash reserves based on the raise that we did a couple of months ago, based on the significant R&D grant coming in, but also the increase in sales and the reduction in expenses. The whole point of moving to Fremont was obviously more production turns, faster product development times, but a significant reduction in our cost of manufacture and our cost of product development. And we've had a few slides on that talk about our gross margin when we're at scale, not full scale, but as we're moving up to proper numbers, that our gross profit on those products will be, you know, around the 45% mark. So, you know, we're in a great position now that the Fremont is coming online, and the sooner we remove the contract manufacturer expense, the better.
Two final questions. We're running out of time. A question that all the shareholders always like to ask, and it's the multi-million-dollar question. What's the plan for reaching a cash flow positive position?
Well, I don't think it could be more fundamental than sell products, right? So I think that's fairly unique for a BluGlass story, and people who've been on the journey for a long time are all probably laughing right now. But I mean, the whole point of moving to the laser die strategy nearly 3 years ago was to be in control of our own destiny, to operate in a market where we can have significant influence. And as one of only 3 real manufacturers in this space, with manufacturing capability and capacity now because of Fremont, we actually feel we can generate a significant and sustainable business out of the laser dyed market, even without the RPCVD products being in market. Just the market dynamics of 2 suppliers not being flexible with their customers, and a third supplier coming in who will be flexible on wavelengths and form factors, means we've got lots of customers that are interested in testing out BluGlass and seeing if we can be a reliable supplier. And then you top that off with the unique features of what RPCVD will do to this sector. We're very confident that the laser die strategy is the right strategy of building a sustainable business and therefore a cash flow positive business. And that's the strategy. So Jim and the team now have to obviously scale the manufacturing, get more products out to market and get customers to buy stuff. And that's the journey we're on.
The very last question, because I'm conscious of time, we've just ticked over. In the lead up to the federal budget, Minister for Science and Industry, Ed Husick, flagged yesterday a $1 billion critical tech fund to support a new Australian quantum strategy. Do you believe this means that the Australian government is acknowledging that there's a global race underway to create the next era of technology, and Australia needs to be part of it? And what does BluGlass think of this initial announcement?
Yeah, so I think we're already a part of it, right? So quantum technology, quantum computing, Australia's been at the forefront of the development of that technology for a very long time. What is super exciting about the announcement yesterday is the government is realising Australia should not just be the R&D hub for the world, but actually also lead the commercialisation part of that new exciting space. So I was very excited to see that the $1 billion set aside for quantum computing not only includes R&D, but it also includes infrastructure. It also includes skilling up the workforce here in Australia, and actually building an industry here where we can sell products and technology and not just be the R&D centre for the world. And in reality, that sort of reflects what BluGlass has been on, right? We've been an R&D company for a very long time. We've picked a fast-growing sector, and a new sector being the GaN laser dyed space. And we're commercialising that technology in a global market. And I think what the federal government has announced yesterday will mean that Australia can stay, well in advance and probably lead this sector as well as the other countries in this space for a long time. So super excited by the announcement. It reflects the government's announcement, particularly the New South Wales government announcement on the semiconductor initiatives that they're talking about. And this is just an extension of that. And I mean, it goes without saying, and a lot of our customers that we're talking to already are already in this quantum space, that lasers play a key role in quantum computing going forward. So that's validated not just by the customers we're talking to and the orders we're receiving, but it's also validated by, I think, something like this initiative that was announced yesterday. So super exciting, and I'm hopeful that BluGlass will play a role in it once we see the detail of how this grant will be allocated.
James and Jim, we're now well and truly over the allotted time. Thank you so much for your time this morning, James, this evening, your time, Jim. We've had a number of shareholders and potential investors on the line. So, and hopefully we'll be able to also put this up on the website as the recording of it, as the company has done previously. So for those that want to hear it again or missed out can watch it. Maybe, James, I'll just hand across to you for a quick wrap up and close.
Yeah, absolutely. And so obviously we'll make this video available to everyone. So watch our website and it'll be out fairly soon. Just really wanted to reiterate, thank you for everyone for logging on. Thank you for your support, particularly in the last capital raise and the rights issue. We know we've been on a journey, but we are now executing on what we've been talking about for the last 12 months. The AGM, we made lots of commitments about getting products to market, customers starting to buy, that we'd pick the right market segments to play in. I think you're now starting to see that is actually true. We launched products, we have customers buying. We're in a very unique market dynamic that is growing fast, and we are one of only 3 manufacturers in this space. So I think it is all in front of us now to start delivering on that at scale. But with the fundraising completed and what Jim and the team are doing in Fremont and bringing it all in-house, I'm actually fairly confident about what our journey looks like going forward. So thank you everyone for logging on, and thank you for your support of the story so far.
That closes today's session. Thank you, James. Thank you, Jim. And thank you for everybody for attending. Have a great day. Thank you.
Thanks, everybody. Thanks, Ron.